Into the jungle, savages. I'm your host, Baloo the Bear, and this is the Crypto Jungle, your source for no-nonsense crypto fundamental analysis and technical analysis. And today we're going to talk about Bitcoin and the rest of the crypto market. We are having a little bit of a move down. We are breaking down out of the bear flag that we've been monitoring over the last 2 months. 2 months? Well, we'll call it a month. We've identified it as a bear flag in the last month. If you're new here, I want to invite you to subscribe. We do technical analysis for the most part, and then we do dive into fundamentals as well when the fundamentals are worth taking a look at, but we're in a bear market. So without any further ado, let's go ahead and take a look at the king of all crypto, and that is Bitcoin. All right, so we're going to start off here on the daily. Now we are just falling out of this triangle, this bearish wedge formation here. Just broke to the downside of that. So why don't we go down to some smaller time frames? You know what? Before we do that, we'll just remind the macro trend. A lot of people thinking that the bottom was potentially in. We've been saying here for a while that there's nothing that we can point to that would indicate that the bottom is in. We are still stuck inside of this lower high, lower low structure of this descending channel. We've been just bouncing around inside here. I was wondering if we were going to get a move up to the underside of this at around 30K, but there is just no demand. Nobody cares about crypto, and it's just, you're getting a serious lack of demand. So, you know, equities are kind of in control right now. When they move down, crypto moves down harder. When they move up, crypto barely moves up. So there is a little bit of a divergence there between the two markets. We're certainly not in a risk on environment. Now let's go into the smaller time frames. Let's take a look at the 4 hour. And let's dissect this a little. I care for lower prices. That's the spirit, my friend. That is the spirit. All right. So yeah, we've been watching this for a while, and I have been saying, you know, I don't like the structure. The volatility has actually been increasing, not decreasing. Typically, when you're in an accumulation, the volatility is going to decrease. The accumulation can take place as smart money begins to accumulate and retail isn't really present. We do have a presence of retail in the market right now, and it's chop city out there. I haven't been trading because the conviction one way or another, conviction to longs and convictions to shorts are very, very low. So I haven't been trading at all throughout this entire consolidation. Basically, the last time I traded was on the way down. You know, once we broke down from 45K, I was shorting. This entire consolidation for the last 2 months, I've done nothing at all. We have an up thrust here, a couple up thrusts here, bearish test, up thrust. I was seeing so many up thrust. I was seeing so much fight at the upper end of the range that I thought there was the possibility of getting up to that 30K level. Didn't happen, came down below, got our bearish test on the underside, and now we've broken back down. This is a very clear sign of weakness. So we have our first sign of weakness inside of this consolidation. Sure, it has not printed a new lower low in terms of the last kind of macro low of this structure, but the fact that we went from a breakout of the top down to a breakout of the bottom, it's weak. It's very, very weak. Let's take a look at the smaller time frames, and we can really see a lot of the up thrust action when you go down to, let's say, the 15-minute. Just really, really terrible up thrust. So for those who don't know what an up thrust looks like, it's basically when you get a breakout rally that just immediately comes back down. So you don't get a consolidation, you don't get a continuation, you get a breakout, it comes immediately back down, and it's particularly weak when it comes back down and goes below the previous area of the breakout. So we've got a very clear up thrust here, we have a very clear up thrust here, we have a very clear up thrust here. It's LPSY. It's last point of supply, last point of supply, last point of supply, and now we've just fallen completely out of the consolidation. Looking shitty. So, you know, going back onto the higher time frames, let's take a look at some potential targets for where we would be interested in observing the price action. You'll notice that I say observe and not buy. I am very much in reconnaissance mode right now. I'm watching the price action for signs of a potential bottom, of which we have none. Typical bottom signatures. The typical structure that you're looking for a bottoming signature is either going to be at minimum a double bottom. So we want to come down and test an area twice. If we can test an area twice, that's fantastic. Another example of a bottoming pattern would be a low, a lower low, and then a higher low. That's your typical inverse head and shoulders formation. So those are typical reversal patterns, but all of this does not apply because we can take a look at the macro trend as we already discussed once at the beginning of the show. High, lower high, lower high, low, lower low, lower low. The trend is your friend until it ends. So we don't have a conclusion of the downtrend. So if you're on the long side, you're on the wrong side. All right, let's catch up with the chat real quick. Crypto DGen 1, good morning. Hello, Just Tree Hugger. Welcome to the stream. Good to see you again. Aston says doesn't look good. Typically, I'm gonna agree with you. Mr. JFK, Baloo the boss. Sure. It's Baloo time. All right. Oh, it's Ian from Skills Inc. Welcome in, Crypto DGen. Good to see you. Okay, so let's take a look at Ethereum. Let's see how Ethereum is holding up. So Ethereum has not broken structure. So, you know, a lot of people get quite excited with these comparative analysis, with this type of comparative analysis when, you know what, I'm going to go to the FTX chart real quick because I've got some drawings on there already. They get excited when they see altcoins outperforming Bitcoin. In my experience, my anecdotal experience of watching these markets for the last 5 years, it's not typically a good sign when we're in the context of a downtrend. It's a fantastic sign when we're in a bull market, when we're in the context of higher highs and higher lows. But when we're in a lower high, lower low structure, Bitcoin is the gatekeeper of the bull market, okay? If Bitcoin is bearish, crypto is bearish. I don't care what it is. If Bitcoin is bearish, crypto is macro bearish. So when altcoins are outperforming Bitcoin in the context of a Bitcoin bear market, that just tells me that there's still retail FOMO that can exist. So there's two factors that come into play. You have very thin order books, meaning that the exchanges don't have a lot of resting orders on the books. That makes the price very easy to move, okay? Then you have retail scrapping together the last bits of money that they have to try and put it into the market because they think that the bottom is in. So if you combine those two together, you have retail, which doesn't buy Bitcoin. Retail is a degen altcoin trader for the most part, and they put their capital into a liquid order books. What do you get? You get markup. You get, an outperformance of altcoins when compared to Bitcoin. But we follow the Wyckoff method here on the channel, and the Wyckoff method focuses specifically on the behavior of the composite operator and what smart money is doing. Okay, and smart money, there are no signs of smart money accumulation. There are no signs of smart money participation. We are still in a retail space, and retail apparently still has money. So because retail still has money, I don't think that the bear market is over. The bear market needs to obliterate all of these new traders' accounts. They need to pretty much give up on things. So, this is basically what we're looking for. We need to see a condensing of the spread. Now, the spread, for those who don't know, is just the distance of the candles. So a tightening of the spread. Let me find an example of a spread tightening. So here's kind of a light example of tightening of spread. You can see huge capitulation move into an automatic rally, into a secondary test, into another rally that's shorter, into another test that's shorter. You can see how it's condensing. So that's a tightening of the spread. And that's what we need to see in a consolidation if we're to assume that there's any form of accumulation going on. And we're just not seeing that. So retail is, FOMOing in because they think the bottom's in. This is a new market cycle for a lot of market participants. If you came in 2019, 2020, 2021, hell, even 2022, those market participants have never gone through a bear market. They don't know how long it takes. It takes a long time. I don't care what the fundamentals are. I don't care what the headlines are. It takes a long time for smart money to accumulate positions. Full stop. That's just a fact. It hasn't changed today. It hasn't changed yesterday. It hasn't changed 100 years prior, and even further before that. It has always been the case as long as humans have been able to trade assets in a public market. So it takes time. It takes at least, a good bull market rally. A good bull market rally takes about a year of accumulation, at least. The longer, the better. Tesla has been an incredible stock to buy. It had a 10-year accumulation. I'm not saying that we're going into a 10-year accumulation right now. I'm just saying that the reason Tesla rallied so hard is because the supply was eaten by smart money over a 10-year period. So there was just not a lot of supply, and the supply and demand dynamics are so skewed that anybody that wanted Tesla stock had to pay an extremely high premium for that. So back to Ethereum, what are we seeing here? We're actually seeing that this consolidation, let's go down to the 4-hour, has not broken structure yet. Let's just do the same sort of thing as Bitcoin. I'm going to give it a little bit more here. So yeah, it's still got a ways to go to the downside. It's a very different structure. It's still kind of distributional, but it's comparatively stronger than Bitcoin. It hasn't broken structure just yet. So it's kind of, we can go into this smaller area right here and we can see, well, I guess it broke there, but ultimately we have some more room to the downside here. So if Bitcoin continues to confirm, meaning if we get, another bearish test, a bearish test of the underside here, that'll probably result in Ethereum coming down to that level that it's been testing. Ultimately, like I've been saying for months, I don't think we're out of the woods yet. I think that we're just having ebbs and flows. This was just enough time to get retail back into position. Now that retail is back in, it's time to dump on them. It's just the malicious behavior of the composite operator. All right. Why the markets are crashing? So they're crashing because we're in a bear market. It's really that simple. I'm going to explain to you a very simple concept, and a lot of people struggle with this. I don't read the news at all. I don't care what the news is. I don't care what the headlines are. They do nothing to help you as a trader. If you're a trader and an investor and you're just watching the news, especially in cryptocurrency, it's going to do absolutely nothing for you. It's going to do nothing for you. This is how markets move, okay? You have accumulation, markup, distribution, markdown. You have the area where smart money buys in accumulation. They control most of the supply once they get that into position. Then you have the fundamentals of whatever project you're in, whatever project smart money is buying. They're buying it because the world needs it. They start buying it, and they control the supply, and they're not selling. So when retail starts to buy, you get markup. Then you get a distribution effect where the smart money that bought down here begins to sell up here. Who do they sell it to? They sell to all of the retail that are buying and piling in because of markup. After that, you have markdown. That's your bear market. So from that point forwards, there's no reason to pay attention to. There is no reason why we fall. The reason we fall is because retail bought from smart money. That's it. That's the fucking reason. End of story. Retail bought it and they can't hold the price up. So the next phase is we need to find our bottom where we trade sideways. Okay, you get that accumulation. We need this to happen again. Okay, once that happens again, that's also when crypto goes real quiet. It's when retail loses all their money, they've got nothing left to deploy, and smart money really starts to pile back in. Things will be quiet for a while, 6, 12, 18 months of nothing, and then you can get that move up because they will be back in control of the supply. So it's that's what we're looking for here. So it's just more of the same. This is a cycle that repeats indefinitely. We've seen it in every single market. Tell me an asset and it's done this, unless the asset's not old enough to have formed this. It's happened. This method, the Wyckoff method, is from the 1920s. It's over 100 years old, and it's still true today. Still true today. All right, let's catch up with the chat. I'm going to be doing a new feature for the stream here, just for anybody who is wanting feedback on their charts, on their analysis. If you are doing your own TA and you just want feedback, what you're going to do is you're going to go into the Discord, and you're going to go into, well, I haven't made the channel yet, but it'll probably be live stream review or chart review, something like that. It'll be on the free side of the server, and you can drop your charts in there and we'll take a look at them live on the show and see, if I agree with your analysis or if there's some improvement that could be made. So if you are interested, join the Discord, follow the About Me page if you're on Twitch, and then there's also links in the description. You can also scan the QR code there on the screen and just join the community. It's right at the top of my link tree. Get into the Discord and we can share your charts, and we can take a look at them live if you are interested in that. Woohoo, is this actually live? You're right, it is live. Isle of Peace. The 200 heat map is at 1250. That's on ETH. Let's take a look. Earth USD? No. ETH USD on FTX. Let's turn on the 200-week heat map. Is there even a 200-week on FTX? Gotta be, right? Maybe not. There we go. 200-week heat map. Now, I hate to be, the pessimist of the situation here. Actually, you know what? I'm not, because we're not there yet. So what are we looking at here? We're looking at the heat map. We actually bounced off of it here. So we could come back down and get a double bottom. And a double bottom is a bottom formation. So if we do print another consolidation on top or just below, it looks like this one went just below, it can go on top or below, whatever, of the 200-week heat map, that could be a positive sign that we have a double bottom. But I'm also just prefacing the importance of patience and waiting for a consolidation, because even if we form an accumulation, I do think that there will be a period of accumulation, a period of the spread tightening over, like I said, a 6 to 12, maybe even 18-month period, where things are just going to go flat. I don't get excited to become an accumulator until things go flat. So nothing's flat right now. Everything is trending to the downside. That's why I'm not too eager to get into any positions as it stands right now. So yeah, that's an interesting level right at around 1270, 1250. So yeah, we'll have to watch and see what happens around that level. That'll be a nice further leg down for Bitcoin, probably get it back down to that 17.5 range. It could be the bottom. We'll see. We'll have to see how price behaves when we get back down to that level. We could come to the bottom of the mean here, or sorry, the middle of the mean. We have this mean line in the middle of this channel, so we could come down to something like this and then get something like that. Long story short, we don't know. Those candles haven't printed yet. So if they haven't printed yet, we can't do any TA. A lot of people think that TA is a way to predict the future. It's not. It's a way to interpret what's happening right now. And what's happening right now is this consolidation is bearish. We've now broken bearish, and we're heading back down. So once we go down to those lower levels, how price behaves at that point, we can observe the candles, we can observe the structure, and then we can come up with a decision as to whether we think that we can go long or not. Closed out my longs from 19 to 23. Not happy, but it is what it is. Hey, you know, it is what it is, man. Alpha Numerics, good to see you in the chat here, my brother. You know, it just looked like such a big old bear flag. I didn't short it because I didn't have the kahunas to hold my trades, but happy to wait for the long opportunities. I didn't short it either. You know, when you're in a liquid market, price can just move too much. It can move too much, too quickly, too easily. I was apprehensive. I thought we were going to get that test of 30. So I didn't want to get in the way of that. I didn't want to short it. I think you made the right decision. You know, hindsight's 2020. Yeah, it's breaking down. Coulda, shoulda, woulda. But you know, I think it was a responsible approach, and you're fine. Because BTC is breaking major support. Yeah. Give ETH time. Still merge froth. Yeah, we'll see. You know, I fundamentally really disagree with the Ethereum merge. I think Ethereum going to proof of stake is a big mistake. But it sure isn't the narrative, and it's sure not what people believe. So we're absolutely going to have, you know, potential for FOMO into the merge. So that's in mid-September, late September, something like that. So it's a possibility, you know, we could rally into the merge, but it'll probably more than likely be a seldom news event. My really bearish targets for ETH are actually quite down there. You know, looking at ETH on the macro, I kind of want it to go to like $500. That would be a pretty nice spot for me to be interested in ETH. It doesn't have to, obviously, nothing has to happen, but I really like this area down here at around $500. I could be more bearish than that, but if I get more bearish than that, people won't believe me. So we'll just leave it at that. One level at a time, one level at a time. How long do you think these drops will last? So I think the bear market will last probably until 2025, if I was to put a date on it, but the drops will stop. So there's kind of multiple phases. You know, we already drew the market structure drawing, you know, the accumulation, distribution, markup, markdown, and that's what we're looking at here. So accumulation, distribution, accumulation, like the cycle just repeats over and over again. So eventually we stop falling. Okay, I'm not convinced that we're done with the drops just yet, but eventually we'll get to that point where we stop dropping and we start trading sideways. So once we start trading sideways, I start DCAing. That's when you start to accumulate the positions. That's when you start to look at the portfolio and decide what assets you want to have exposure to. You decide how much you want to have allocated to venture capital, because there's always innovations that drive demand in the early stages of the bull market. But yeah, you know, it takes time, man. It takes time. Why? Because smart money just can't buy. They can't just buy. You go to the exchange, you have some money, you can get whatever the fuck you want, and it's pretty instant. Smart money can't. It takes them months to buy a position. If they're like, okay, I want to have a $100 million allocation into Bitcoin, it's going to take them 6 months to get that. And that's just one person. That's just one smart money investor deciding to allocate 100 mil to Bitcoin. It's going to take, or they have to organize, you know, a meeting with some fucking sheik for an OTC deal. Like, they're not like you and I. We have superhuman abilities here in the markets. We're like ninjas. We can get in, we can get out. We don't suffer slippage. We don't have the same problems that institutional grade investors have. We can get in and out. It's no problem. But this is also where the disconnect happens. This is also why people don't really understand why, you know, if smart money gets in, shouldn't we be rallying? No, when smart money gets in, they've made a decision to get in, and then they need to do their accumulation campaign, which can take anywhere from 6, 12, 18 months or more. I mean, time to go down. Just bought 2 more ETH. Giver. Isn't dumb money also going to be the people who are going to start short here? Watch there be a surprise dumb money pump. Dumb money is always on the dumb money is on the sidelines in cash. I would say, dumb money is just, for lack of a better term, I mean, dumb money is a pretty bad term, but it's just unsophisticated investors. I would say anybody trading is dumb money. Like, dumb money it's a weird saying. It's a weird word that we use. Dumb money is liquid money. So people that can come in and out, people that can trade, even like large, crypto whales are still considered dumb money. Dumb money makes up a lot of the market. The smart money is the composite operator, and that's the one that can't move in the same way. That's the one that has to do these accumulation campaigns, and they typically don't use stop losses. They typically self-custody. They're holding their stuff on a ledger. They remove it from the market entirely. It's not on an order book. If it's on an order book, it's not a supply shock. It's a very different existence. And if you're on an exchange, you're dumb money. Even if you're a crypto whale trader, you're still dumb money if you're on an exchange. Smart money's on the sidelines. Yeah, or they've begun accumulating. It's hard to say. This could be the beginning of accumulation, but we can't assume that. We can't assume that this is the beginning of accumulation until we come down and test it and prove it as support. If we can prove that as support, now we have an area of interest where smart money begins to accumulate. But because we don't have that yet, because we haven't tested here for our secondary test, let's just do a little Wyckoff thing right now, a little Wyckoff thing, a little session here. You have your seller's climax in Wyckoff, then you have your automatic rally, and then you have your secondary test. That's the beginning of it all. That's where the trading range begins. That's how the Wyckoff accumulation begins. It's far too early to jump to conclusions as to anything, really. We can't call a bottom. We can't call continuation. Well, I guess we can call continuation, but there's a lot that we can't do because we haven't printed the right candles to really determine where we are in this market cycle. All right, let's see if anybody wants to go into general chat and share a chart for feedback, you can do so if you so choose. We're going to try that as a part of the show. But other than that, we can take a look at some of the other tickers, but I'm first going to take a look at the DXY. So the dollar is getting a rally. I don't know if this is going to be a sustained rally. We are still quite overbought here on the dollar. Yeah, we'll see. We'll see what happens, but it is quite a large move here for the dollar index. But I want to see this cool off a little bit. So what I think would be nice, or what I think would be appropriate, is if we kind of come back down and test this area for a while. Test it. This is on the weekly chart, so we could test it for a year before getting a rally, or a breakdown. It could break down as well. We don't know, but I do want to see it kind of just trade sideways for a bit, because as long as the volatility's here, the volatility in the rest of the market is just going to be too intense. So yeah, let's take a look at the high risk index. We'll take a look at the NASDAQ, the tech index. NASDAQ coming up to this area of resistance. Looks like it might fail, but this consolidation's pretty nice. I mean, we could go to higher levels here. We're not insanely overbought or anything like that. Let's take a look at the S&P. S&P on the macro. We've been in this massive channel for a while. Basically, since 2008, we've been in this rising channel. The mean of this channel has been a very good area of interest to pay attention to. So this is where, you get those shakeouts, those worrying events, and we've come back down and we've hit it. And then we also have these panic areas. So that was the bottom of the 2008 financial crisis, and this was the bottom of the COVID crash. both very significant events. But those came with a lot of news stories and a lot of fear and a lot of irrational movement. Right here, we're getting above this area right here. Let's see if we can draw a trend line on that. Bumping right into the trend line. We'll see if we get a rejection from this level. If we do, we could potentially come back down and test the mean again, maybe get something like that before going for a breakout of that trend and then a possible move to the upper side of the channel. But ultimately, I do think that the fundamentals of the global economy are weak. We can't, we have to react to the ebbs and flows as they present themselves. But I just don't see us getting any sort of sustained bull market like we've had over the last 12 years here in equities. So we might get a move up, but it could end up just being a double top before a move down. I do think that the fundamentals globally are quite weak. China's ready to just completely fall apart. Their banking system is not in a very good condition right now. So, it's tricky. It's tricky to make assumptions. I don't try to read into things too much. I just, interpret the data that's presented to me. And right now we're at area of resistance after the bounce. I told you guys, watch for a bounce off of this mean. We got that bounce. Now we're into the resistance. Maybe we come back down. And while that is happening, the story, the narrative will begin to reveal itself. And if price action continues to be bearish, that the narrative and the news will be negative. And if the price action is bullish, then that the news and the narrative will be positive. How many wallets do 100 million investors shall have to avoid being spotted? How smart money manages their cold wallets? So there are some wallets. If we're talking about Bitcoin, I guess it depends on the coin that you're talking about, but most smart investors are accumulating Bitcoin. Depending on the wallet, you can have wallets that generate multiple addresses, like millions, billions of addresses. For example, I use Green Wallet on desktop and I use Blue Wallet on my iOS phone, my iPhone. And both of those wallets will generate a new address. So if smart money is wanting to just, make their money kind of not disappear, but just they don't want people prying into their wallets and having a look at their overall holdings, those wallets will individualize all these different UTXOs. And so every time somebody sends them a transaction, they get a new UTXO. It's all assigned to the same wallet, but whoever sent them, they can go and look and they can see the money that they sent them. They can't see anything else. They can't see the total holdings. So, with Bitcoin wallets, you only need one seed phrase. You only need one address. You only need one cold storage wallet. It's the wallet interface that allows you to kind of, look at all of the different, it's the wallet interface that gives you the tools of the blockchain. So I do recommend those two. I'm gonna have to make a link on my, I'm gonna have to make a link for wallets that I recommend. I'll have to put that in my link tree, or just apps in general that I recommend. But yeah, Green Wallet and Blue Wallet are fantastic wallets that will generate a new address every time somebody sends you money. If somebody sends you Bitcoin with Green Wallet, the only thing that they can see is the money that they sent you. That's it. And they can see if you move that money after, but they cannot see all the Bitcoin that you have. Volume declining on the way up on the S&P 500. Are the sellers exhausted? No, demand is exhausted. Demand is exhausted. So, demand is declining. We don't have people piling in and carrying this forwards. We're rallying and we have a decline in volume. So, we're losing momentum. So now is the time to buy. It depends on your time parameter and it depends on the project, in my opinion. Now, obviously, nothing here is financial advice. That fucking cliche that every YouTuber has to say, but you know, I'm not licensed, so I gotta say it. It depends on your time horizon. I don't think that purchasing Bitcoin at these kinds of levels, you know, once the volatility kind of decreases, I don't think buying Bitcoin under 30K is a bad idea in the long run. That's my, you know, 5,000 foot assessment of the market. I don't think buying Bitcoin under 30K is a bad idea. I will also say that I think that it will be a good idea until at least $3,000. I don't know where the floor is. Nobody does. Okay. I can just interpret what I have available based on the analysis. The analysis is in a downtrend, so I think that we can continue to go to lower levels. I also think that Bitcoin at 30K in the long run is fine. It's going to be worth a hell of a lot more than that one day. So it really depends on your time horizon. Yeah, 2022 wallet tutorial would be cool. It's coming. I have a whole mastering Bitcoin series that I'm scripting out currently. I'm doing a ton of pre-production work. They're going to be really, really good videos. So you guys make sure to subscribe if you aren't already. And yeah, it's gonna be mastering Bitcoin, from acquiring non-KYC Bitcoin to secure storage of your Bitcoin, how to send your Bitcoin anonymously, like the whole suite, everything, so that you're really knowledgeable with specifically Bitcoin. How low? $350 ETH? It's absolutely possible. Absolutely possible. Nothing is impossible when you're in a downtrend. You know, when you're printing lower highs and lower lows, the trend is your friend until it ends. So as long as we are on a macro lower high, lower low structure, it means that we can continue to print higher lows or lower highs and lower lows indefinitely. Obviously, eventually, smart money is going to reach the point where they're like, yes, I'm a buyer. But your mindset, the way that you think about the market, needs to be, we will go lower as long as the trend is showing us lower levels. Let's see what Alphanumerics says about this event on the daily. Looks like we're going to get a bearish cross, bearish sell signal on Alpha. Probably tomorrow's candle. Might be a little bit of a rally into the underside of this consolidation if it is a bearish break to the downside. So I wouldn't be panic selling or anything at this position if people went long. I'd be watching for kind of a bearish test underneath that tomorrow. If we can't get back inside of the consolidation, we'll probably resolve to the downside. You live in Bali? No, I live in Thailand. I did live in Bali. $27 people watching the stream. I love it when the market dumps. It's the only time people join in. We had a good number of people in the last one too. Hit the like button if you guys would be so kind. Not that there's a ton of people searching for crypto YouTube videos these days, but you know, if anybody is out there, the algorithm will know to at least show this stream to them. So go ahead and help a brother out. Short entry on ETH next month. I'm not shorting. But we got a new follower, Crypto Degen. Thank you. I'm not looking to short. I think that the order books are too thin. I don't get cheeky in a bear market. I really don't. Preservation of capital is number one for me inside of a bear market, because the unpredictable price action is very, very high. You get a ton of chop. It's just, you have the highest levels of unpredictability are during the bear market. So I try to avoid too many positions. Fundamentally, I think the ETH merge is going to be a flop. So we'll see. It could be good because I'll be counter trading the narrative, which could be a good play. But yeah, we'll see. There's no like button on Twitch. Don't worry about it. Yeah, there is no like button on Twitch. But you followed. It's all good. All right, what else can we take a look at? We can take a look at Bitcoin dominance, trending its way back down to 40%. Do a little SLP action, back down again on SLP. What are some tickers you guys want to take a look at? Monero, this is a project that probably isn't the best investment, honestly. It hasn't really been a good performer. It's just an asset that I like to keep a close eye on. I think that this project's a very fundamentally sound project, and I enjoy the community, and I think that that this is a very important project, but it has not been the greatest one to, you know, look in terms of a trade. It's very hard to get Monero. So, you know, it doesn't have the best liquidity, but hey, probably come back down to the bottom of this at around $100. Buy some more Monero. OP. Optimism, the useless fucking sidechain, the useless scaling solution. Just got the bearish confirmation on this, so the trend is certainly putting a lot of downwards pressure. So the bullish thing that I can say is, you know, we could come down and maybe test around this area. That would be the bullish support zone. But me not being bullish right now, me being Baloo the fucking bear, well, I'm always Baloo the bear, but me not having a ton of confidence on the bullish side of things, more realistically, I think that we would be looking at a double bottom situation. So right back down to where it came from would be my analysis. But I could be wrong. So watch this level around $1. So $1 is a very psychological level. You can get a lot of support at these psychological levels. So do watch out for that. If that fails to hold, though, we'd be going down to the next kind of macro psychological level at around 50 cents. It's just typing that. There you go. Do you mine Monero? No, but I'm very interested in mining Monero. I do run a Monero node, which doesn't pay you anything. It's just a way to contribute to the ethics of crypto. So I do run a node, but no, I don't actually mine. I don't mine anything. I do travel around a lot, so mining is difficult. I've always been very interested in mining. I've just never been rooted enough or willing to invest enough in becoming a miner. But yeah, you know, I think Monero is a fantastic coin to mine. Both Bitcoin and Monero would be the only coins that I would mine personally. Do you follow the Bitcoin halving cycle theory, or is that crypto past now? I do. I think that the crypto halving cycle has really dramatic effects, mostly now on narrative. And I do think that there will be positive effects in 2024 when the halving comes. There will be a rally into the halving, there will probably be a dump after the halving, and then there will potentially be a bull market after that dump. So I do think that the halving still holds a lot of weight, but we're still, you know, we're a ways away from the halving. Yeah, no, it still holds ground. But as time progresses and the halvings continue, it's going to become a non-event because the block reward is going to become so small that the miners aren't going to have the same effect on the market overall. They're not going to have the same selling pressure attached. It's just going to become an inconvenience for miners. It's going to go from this, you know, market driving effect to just a mining inconvenience. Staking, I don't stake. BNB BTC printed an all-time high recently, quite interesting. That is interesting. That is interesting. The scammers love BNB, man. They love it. They gotta scam people. You gotta buy that BNB if you want to scam people. I think that this is a good metric to just show that crypto is a scam. Like 95. That's me being really nice. It's more like 99%. 99% of crypto is a scam, and you know, BNB outperforming BTC is a pretty good metric of that. But yeah, it's certainly interesting to observe. Absolutely. Avalanche. This is a blockchain that I do like, but I don't know if I like it anymore because I don't like Ethereum moving to proof of stake. So I don't know. And it's kind of really been quite a roller coaster. My God, quite a roller coaster. You know, it could probably chop sideways for a bit. I don't know what the role of Avalanche will be in a proof of stake Ethereum world. I think that is something that's going to be across many other side chains. I don't see the point of Polygon. I don't see the point of Avalanche, even though Avalanche has a very good and unique design. If Ethereum is still the most popular, and if Ethereum can pull off Polygon transaction fees and pull off Avalanche transaction fees, what do we need these guys for? They have less of a track record. They have less of a safety record. We would probably want to go with the one that has a little bit more adoption. Even though I'm fundamentally against the ETH merge, I think that, you know, people are just going to end up going with ETH because it'll be cheap enough. Miner. Is Miner a coin? I don't know. He spelt it like a underage miner. I don't know. Market dumps on my market dumps. My comments get seen. All right. I think that's it. So just to recap, you know, we are breaking out of this bearish consolidation. Alphanumerics is going to come in the next day or two and confirm the bearish trend, taking us back to risk off. If you guys are interested in the alphanumerics indicator, scan the QR code and go to the custom indicator in my link tree. Yeah, that's all the time I got for today. I got to get ready for the virtual classroom. So thank you all for joining into the stream. Don't worry. I mean, we're in a bear market. You guys are here. You're in the thick of it. And honestly, just preservation of capital. Don't revenge trade. Don't try and make up for lost time. Don't try and reverse any of the mistakes that you've made. Don't kick yourself or beat yourself up that you were in the bull market and you didn't take more profits. Don't do any of that shit, okay? Move forwards. Always forwards, okay? This is a very innovative space, and if you're smart and you're calculated and you do your due diligence, you're gonna come up ahead. So that's what I'm gonna leave you with. So thank you all for joining in, and please trade safe. It is a jungle out there. Peace.